Morning, thanks for joining me on Friday. Time is just gone 7 a.m. in the UK. Thought I'd give myself a beach background here today. This is a shot from Phuket because I'm heading to Phuket, Thailand tomorrow for the next 2 months. So you can imagine how happy I am about that to get out of the UK. Right, I'm just looking at some of the trades that we did yesterday. We had 1, 2, 3, 4, 5, 6, 7 winning trades. Pretty good day. And even the ones that didn't work, well, they didn't really cost any money. I don't think we actually had any stops. But anyway, let's go through them. So the Aussie dollar, we had shorts at 81.55, 81.75. They worked really well. We dipped down to 80.90, so there was a good profit in that one. Euro yen shorts we had at the strong resistance level of 128.80, 129.00. They worked really well with the high for the day, bang on that level. And there was up to 100 pip profit on the slide to 128.00, 127.90. That was our target for profit taking. That was in fact the low for the day as well. So those levels work really well in the euro yen. Canadian yen, CAD yen, reversed to strong support at 89.10, 88.90. There is, well, the last time I looked anyway, there was a low there this morning. We'll check that in a minute. Dollar CAD longs at 126.45.35. They were a little bit tricky because we overran to 126.05. But if you did manage to hold on, we hit our target at 126.90, 127.00. So there was an odd, there's about 50 pip profit in that. And then we reached our sell level at 127.15, 127.25. We'll have a look at that in a minute as well. Euro, we've been shorting all week at 113.50, 113.70. Yesterday, that yielded a profit of up to 70 pips on the slide to 112.80. Anyway, look, there's a couple of other trades there, but let's get on and have a look at the charts and see where we are. So let me shrink myself here. So the Aussie yen trade was really nice. We had a moving average resistance. We had a confluence of Fibonacci levels. That worked a couple of times. Last time hitting 80.85. We've got support down at 80.60, 80.50. We'll see if that gets tested today. But again, the same level, the same resistance level applies for today. Euro yen, as I said, had up to 100 pips profit in that trade yesterday, so that was nice. CAD yen. Now we have bounced 50%. So what I mean is the dip from late October to early December. We have recovered 50% of that. Now you can see the trend line and the moving average there, which would be a resistance level for today, but I'm more focused on this support level down here, which we have at 89.10, 88.90. And as I said, we've bounced right off there. We've actually got the 200 period moving average on the 4-hour chart, lending support to what is a fib level. So that seems to have held, and maybe we can head back up to sort of the 90, where is that, 90.30, 90.40 level, which would actually be a good resistance level for today. This is the dollar versus the Canadian overrunning my support level. I don't know whether that was enough to stop you out, but if it wasn't, we did get a good bounce eventually, right up to my target of 127.15, 127.25. That's a good resistance level. Clearly it's holding, you can see that. So it's a question of whether we dip from there. We can have a very, very tight sort of 10 pip stop. So it's probably worth a try, risking 10 pips or 15 pips for a potential dip to the sort of mid 126 area would give us a 60, 70%, 60 or 70 pip potential profit. So in my books, that is a very nice risk reward trade. US dollar levels, well, it's just the fib levels really that are working really well. Moving averages and trend lines not really coming into play there, but certainly it works. So that mid 113 area, 113.50, 113.50, 113.70 was my sort of 20 pip sell area, and we've just reversed from that and dropped a good 60, 70 pips. As you can see, really just a consolidation phase for the euro. So it's scalping only. I don't see any reason to be running trades overnight. We've just got to try and take 50 pips here, 50 pips there if we can until the trend resumes. Well, the trend is actually negative, so we'll see if we break lower and then resume that bear trend. Table, we have a really good buying opportunity down at 131.70, 131.50, and we've been down as low as 131.65 and tested it twice in the middle of the week. So 2 opportunities to jump into a long position. If you've done that, we've got a very small double bottom. I could call that a tweezer bottom actually if you look at it on the daily chart, which is quite positive. I would love to see this rally back up to sort of 133.00, 133.20 for profit taking. That, I mean, that would be almost 150 pips, which would be pretty good. But even at the moment, what are we looking at? We've been up to 132.33. So we've got maybe 60, 70 pips potential profit on a long position there. But I think we've got further to go. I think we can crawl slowly higher. And if we do retest that level, well, that would be a buying opportunity again. Obviously, we've got to close the week holding on to that level. We start closing below sort of 130, 130, then that would be a sell signal for the start of next week, because it would mean my big support level has been broken. We had some good action in the pound versus the New Zealand dollar as well, although I didn't put that on yesterday's cheat sheet, as I call it. This is my spreadsheet of trade ideas that I send out to my subscribers every morning by 7 a.m. So if you are a subscriber, you've received that already this morning, and you may already have input some of your orders waiting for them to be hit. The top of that list was the gold trade that we all have been doing all week, selling at 1786, 1789, in that range. Yesterday we got to 1787, so again we got another chance to short gold at the resistance level, and that really is working beautifully. Now, if you ran that overnight, where are we down to? 1770 we've been to, so that's a potential 17-point profit on it. And as you know, gold is in a bear trend. I think the outlook for gold is negative. If you've been following me for days and weeks and months, then you will know that I have a negative outlook for gold. You will know that I don't believe gold is an inflation hedge. Well, I think that's been pretty much proved by the fact that inflation is at sort of multi-decade highs and gold is going down. So I do feel sorry for all you gold bulls who have been told to buy gold on social media because it's such a great inflation hedge. Not something I've ever believed, but there you go. Maybe I'll be proved wrong, but right now I am certainly being proved right. And it certainly isn't a hedge against falling stock markets either, because when they collapsed this week, gold only got up to my resistance level and then sold off. So anyway, that's worked really well. That resistance is still relevant, but I think the days of us testing that resistance level are over, and I think it looks like gold will break lower sooner rather than later. Aussie dollar sort of dithering. We could actually be forming an inverse head and shoulders pattern. It's entirely possible. Look, this could be the left shoulder, this could be the head. We could now be forming the right shoulder. We'll see if we dip to sort of 7100 and then turn around and go up. I'm going to draw a neckline on here just to remind myself if this inverse head and shoulders pattern forms, and that would be quite bullish. But for now, we've got resistance around 7200, 7220, as I put on my 7210 actually, as I put on my trade sheet this morning. That coincides with some moving averages on the longer term charts, daily chart, weekly chart. So that is really quite a strong resistance level for today, and we fell just short of that this week at 71.86. Couldn't quite manage to test that resistance level. We will see if that happens today. Obviously, if we were to close the week above there, then that might be considered a break of the neckline of the inverse head and shoulders pattern. I'll have to review that over the weekend, but worth keeping an eye on. Pound versus the Canadian dollar has actually got some quite tradable levels, and it almost looks like an inverse head and shoulders pattern on this market as well, which may have been the reason that we've triggered a bit of a recovery. I could argue that that's the left shoulder and this is the right shoulder of an inverse head and shoulders pattern. We've had a steep drop, so that pattern is relevant. Too many people think they've spotted head and shoulders patterns or inverse head and shoulders patterns when they haven't. But this one actually does look relevant, and we've gone straight to the first target and the resistance level at 168 sort of 10, 168.10, 168.20, 100-hour moving average. This is the hourly chart I've switched to now. Holding there, although we seem to be just breaking above the 100-hour moving average. So the question is, do we get through 168.20? If we do, we could get up as far as 169 sort of 10, 169.20, which to me looks like a very good resistance level, but certainly could act as a target on a break higher today. So quite interesting pair to watch. Now then, I want to switch over to some stock markets. Here we go. E-mini S&P, worth a look. I actually need to adjust my screen here. Give me one sec. The E-mini S&P, the US stock markets caught me out at the beginning of the week. Did not expect them to see them go up in a straight line Monday, Tuesday and Wednesday, but they did. Yesterday, more of a consolidation as we approach some good support around 46.60, 46.50 in the E-mini S&P futures contract. We'll see if that holds. Clearly, these bulls are just not giving up. At one stage, I thought that we had further significant moves to the downside, but actually, having said that, my big buy level for last week was at 45.05, 44.95, and that was the exact low for the week. So that really worked beautifully. The problem is you would have been able to take 30 points profit by the close on Friday, but you really would have had to run the position over the weekend, which is something I don't tend to do, especially when you've got crazy stuff going on like this COVID outbreak and whatever else. But anyway, if you did run that, and I know some of my subscribers actually came back to me and said, oh, I ran a long position over the weekend, and they were very, very happy on Monday. I didn't. What a shame. But we now do have a good support level at around 46.60, 46.50. So let's see if that holds in the mini S&P today. Nasdaq mini contract broke what should really have been quite a good support level at around sort of 16,250, 16,200. We just sailed straight through that, retracing 38.2%, almost 38.2% anyway, of that big run up this week. Now, we have support down at, as I've said on my sheet, as I've said on my cheat sheet actually, 16,000, where is it on here? Here's my cheat sheet. 16,120 down to 16,090, and there's another support level just below that if we break down. So here we are, we're testing it. It's holding. You can see we've been consolidating there all through the night, really. So we'll see if that does act as a sort of a trampoline, as a bit of a platform for the market to recover in what is still a bull trend, really. I mean, when I look at it, we are consolidating recent gains, but I'm not seeing any particular negative pattern. We did have a head and shoulders pattern, which kind of played out because we hit our downside target of 15,600, 15,550, and we bottomed exactly at that level and then rocketed back up to the resistance level at around 16,400. 16,450, and if you remember, that was the level at which we were selling last week, and it did so well. So to summarize that, the Nasdaq is very much in a sideways consolidation, and we will wait for a pattern to develop. I'll just flick onto the daily chart of the Nasdaq actually. Where can I? Yeah, if I do that, we can have a quick look at it. You know, I don't really see this as any particular pattern. Oops, hang on. That's where I need to be. I don't see this as any particular negative pattern, actually. It's probably just a consolidation. We did have that big bearish engulfing candle, which did lead to losses as we expected it would do. But it is becoming more volatile. That's the one thing I will say about that, is that when markets are topping out, when they are reaching a peak after a very long bull trend, they tend to, the first step is for stock markets to volatility to increase. So it's a case of big players taking profit because they think the market's run far enough, short players jumping in, but those bulls don't give up. So they will always fight back, and you will always get these big up moves. And this leads to increased volatility in stock markets. It's a classic first signal of a market that is that could be in a topping situation. But these don't last days or even weeks. This can last months. So this isn't something you want to say, oh, right, we've had about 2 weeks of volatility, so the market's going to crash. That's highly unlikely. What generally tends to happen is that you'll get this volatile period, then you'll form some sort of negative pattern. You will get big down moves, but you will get big up moves because the bulls are still in there with cash on the sidelines, and when they see weakness, they will jump in. And even when stock markets are trending down or they're even crashing, you will get these dramatic up moves. You get the biggest single day moves higher in stock markets during a bear market or during a crash, by which I mean you'll have a massive move to the downside, but then eventually you'll hit a support level and the market will absolutely tear higher. You can get sort of, you know, double-digit percentage gains in a day during a bear market, and it really catches out the shorts, takes all the shorts out just before their market then collapses. So it really is a very difficult scenario. I've traded every stock market crash since 1987, so I've got a lot of experience doing that, and they are absolutely crazy. It's not a situation where you can just sell short and sit back, certainly not with a trailing stop anyway. Anyway, I'm sure we'll get to trade that in the months or years ahead, and it will be great fun, and hopefully I'll be able to guide you through that when it happens. Okay, I hope that's helped for today. As I say, you subscribers, you've already got all the levels out there. You've probably already input your trades into your system and you're waiting for them to get hit anyway. If you are watching this delayed, where should I put myself? Should I put myself over here? If you are watching this after a bit of a delay, delayed release, I release this later on in the day after my subscribers have seen it, then you and you would like to join in and have an email delivered to you by 7 a.m. UK time with all my trade ideas and my written reports on a PDF sheet. 24 markets I cover. Stock markets and forex, commodity, everything. If you want that delivered to you by 7 a.m. by email, then please have a look at my website and see what we offer. And of course, if you need to speak to me, you just hit the contact us button wherever that is, and I will have a chat with you and tell you about our services. Okay, that's it. Please put your comments in the comments box. Please ask any questions in the comments box, and I will get back to you as soon as I can. I do monitor it constantly throughout the day, actually, so I tend to get back to you pretty quickly. Let me get rid of this. And please do me a favor, please like, please share, and please do subscribe to my YouTube channel. If you're enjoying what I'm posting every day, then that would be a massive help to me. Thanks very much. Have a great weekend. Enjoy your trading. If you're trading crypto, I should have looked at crypto today. I'll look at crypto next week. If you are trading crypto, it does look like the markets are in some sort of negative trend and should trend lower. Bitcoin has resistance at around 52,000, 53,000. That resistance level has held on this bounce back, so I do think that crypto will go lower over the weekend. But as I say, I'll have a look at that next week and do a look at Bitcoin, Ripple, Ethereum, or if you've got any suggestions you want me to look at something specific, just again put something in the comments box and I'll have a look for you. Great. Good luck if you're trading today, and have a great weekend. I'm flying off to Thailand tomorrow, so I will be joining you from sunny Phuket next week.